You need to watch this video if you want to stop losing trades pointlessly. I'm going to teach you about closures, why they're important, and how you can actually use them to validate trades, avoid losses, and make big wins.
Want to trade like the pros? Join my free Telegram channel where I reveal the actual trades we've taken, the powerful strategies behind them, and the results that speak for themselves. It's also your direct gateway to my exclusive mentorship and VIP program, where traders are leveling up fast. Don't miss this chance to learn, grow, and win. Tap the link in the bio or description to join free today.
First and foremost, what is a closure? Let's assume this is a 1 hour chart, and that means that every hour that passes, a new candle will form. So that means each candle here, each candlestick that is formed around here is 1 hour candlestick. So that means that at the end of every hour, the candle will close. So let's say this candle was formed at the start of 1 hour, and then at the end of it 1 hour it closed from here, same as this one, same as this one, and every candlestick that you're seeing around here. So we can see that this was an uptrending market, so which was creating swing highs, it's breaking to the higher highs, going to the higher zones. Now first of all, we can see every time the candle closes, there is a new candle that is formed. So that means here there is a closure, 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 and this also a closure. So the reason as to why we need to wait for these closures is because until a candle closes, it can reverse on itself. What I'm meaning is that anytime the market has not yet closed either above the zone or below the zone, we have to first confirm before we take a trade. So that means if the market closed above this swing high, it would open a door for buying and the continuation of an uptrending movement. And that means that the market is continuing to go higher highs. So that means that we're looking at the market coming back, and then we look for a trade around here in order to continue with the market's direction. But what if the candlestick doesn't close above? Well, if the candlestick closed below the swing high, it could be a rejection. So which means the market has rejected to break this higher high. This is looked at as a rejection. So the market has rejected to break the higher high. So which means you're not going to continue to buy. So we are having what we call a body and a wick. So when a wick is the one that has broken a higher high or a swing high, that means the market has rejected the higher zones. So we have to first confirm before we take a trade. And that's why we look at two things when we are trading before we take any entry. So there is what we call confirmation and also rejection. So we are having this up above zone that has rejected. So this is a rejection zone. It has rejected. And where did the market close from? We confirm that the market has closed around here. So this is our confirmation zone. So we have a confirmation zone and also a rejection zone. So we know that the market has now failed to break a higher high. So we are no longer looking for a buying entry because the market has rejected and it has not broken the recent high. So we can't take a buying entry. Instead, we are looking for selling entries. And this also applies to the traders who want to take a trade when the market or when the candlestick has not yet given a confirmation of where it has closed from. So what if you want to take a buy trade and then you saw this market still moving like this and it's not stopping at the moment, and you bring yourself waiting for a buying entry? So what is going to happen? Let's say you took a buying entry from here and you are focused on above, and then you are closing, you are taking your stop loss around here. So what if this candlestick, because it hasn't even closed yet and it's still moving, what if it comes down and then drops like this? So what do you think is going to happen? You're going to end up in losses. So that's why we have to wait for confirmation to see where the candlestick has really closed from in order to take a trade. So when the market closes like this, when the market has rejected, of course, now we are looking maybe for the chances of selling. But we don't also jump into the market like this. Now, let's say that the market maybe dropped and also broke this lower low. So what do you think is going to happen? This is the swing low around here. If the market broke that swing low, what do you think is going to happen? Of course, we are waiting for the market to come back, and then we take a selling trade from here. So what if the market doesn't actually break the swing low? What do you think is going to happen? And the market does this. So this is why you need to wait for the closure. Now, the market is doing this. So you are only going to trade after any swing is broken by a full body candlestick. You have to wait for another candlestick that is going to break either low or swing high. So for this one, now you have confirmed that now the market has closed above, let's say, this high, and it has closed with a full body candlestick. So do you see how I save you from two losses? Because you were going to sell and then you lose, and you are going to buy and then you lose. So this is why you need to wait. So if we can see any confirmation like this one, and we see that the market has closed from up above, so that means what we're going to do is one thing is to wait for the market to come to this zone as our order block, and then we take a buy entry. Simple as that. So that means if the market retraces back to this zone and then we get a lower time frame confirmation, then we have to take our buy entry and then we focus on the recent high. So that's how we trade on these closures. So I'm going to show you the example of the real chart example of how you have to take these trades, and more examples about how you have to take these trades, and also you go and back test about this thing, and then you see what I've been talking about if it's right, because I have been looking at this for more than 4 years and it has really worked for me. As long as you wait for a closure of a candlestick, and then you're going to make it in trading, I'm sure.
If you've been jumping from one free strategy to another and still can't find consistency, it's time to change how you learn. I've created an advanced mentorship at skillsfxuniversity.com, built for traders who want real mastery, not recycled content. Inside, I show you exactly how I break down the markets, catch precise entries, and grow consistent results, without indicators or guesswork. And here's the game changer. When you join the Profit Accelerator, you get a free $10,000 funded account. When you join the Mastermind Access class, you receive a free $100,000 funded account. No extra fees. This is for serious traders only. Tap the link in my bio or check the description below to get started today. Let's build your breakthrough.
Okay, now let's look at this simple example here. The market has swept liquidity around here above, and someone is looking at buying around here because they're seeing imbalance and order block and liquidity and all that, but they have not understood that the market has failed to break the recent high. So what is going to happen? Of course, if someone is going to buy from here, he is going to lose, and that's what is going to happen. So now we are looking at this. If someone is going to buy from here, they're going to lose because the market has not fully broken the higher high and it has just swept liquidity on the recent high. So that means we are no longer focused on an uptrending mode. We are no longer focused on the market that is buying. What we are looking at is for the market to break the lower low in order to get an entry. So what is going to happen is that let's play this out and we see what is going to happen. So the market now breaks the lower low. So by the market breaking a lower low, this means it's a break of structure. So confirmed break of structure around here with a full body candlestick. So which means the next thing we are looking at is a selling opportunity. That means we are looking at selling from this zone because this is a newly formed order block where the sellers started with full force to dominate the market. Now this is what is going to happen. Let's play it, and this is our zone that we are focused on in order to take our sell entry from. So if someone is waiting for the market to come into that zone, of course, I'm not going to talk about the lower time frame confirmation. You can watch my past videos about lower time frame confirmation and all that. Of course, they will wait for the market to come in the zone and then they confirm on a lower time frame and then they take a trade. They don't just jump into a trade and then they take it. So which means if someone is taking a trade from this zone, they are going to be focused on the recent low, and this will be their take profit, their last take profit. So this is the recent low, and that's where someone will be focused to in order to take their take profit from. So let's play this out and we see if the market really taps into the zone. Boom, the market has tapped into the zone, and those ones on lower time frame are looking for confirmations on a lower time frame, and then they're taking a sell trade, and then let's see what happens. Boom, the market hits all take profits. So this is what I've been talking about. Now, if you want to trade really well, you have to always look at zones that have broken, and then you take your trade from those zones. That's it, and that's all. But if those zones that have not broken, have not confirmed they are breaking, of course, wait for any confirmation that is going to give you any entry on that zone. For more information, you can get to my classes and learn more about these things, guys.